Hi, it's Gareth Vaughan at interest.co.nz, and I'm here today with a double-shot interview with Adrian Orr, the CEO of the New Zealand Superannuation Fund. Thanks for coming in, Adrian. Obviously quite a busy week for you. You've put out your statement of intent for the next 5 years. In that statement, you've said quite a lot about your plans for New Zealand investment. Now, can you give us a quick rundown on what these are? There's quite a few categories you're looking at.
That's right. Well, thanks, Gareth, for the invite. Yes, we have put our statement of intent out. That's a legislated obligation of the fund, and what we try and do in that statement is say in, I suppose, simple English, what our hopes and aspirations are for the fund over the next 5 years. And we think 5 years is a kind of minimum planning horizon, because the investments we make, even the most short-term investments, you can't really tell success or not over any period much shorter than 5 years. We're a global fund, but we look for opportunities, I suppose, where our competitive advantage kicks in. And in our statement of intent, our New Zealand investment aspirations very much push on that competitive advantage. So we've launched 5 strategies, and when I say launch, they're all at different stages of, I suppose, implementation. We're very clear on what we want, and we're going into the process of getting access. Probably the most exciting one for us in terms of internal activity at the fund is direct investment, and in that strategy we're looking for big licks of big things. We're trying to get away significant sums of capital into long-term assets in New Zealand that give us the return we need and give us hopefully long-dated New Zealand dollar inflation-protected returns. We can look for enterprise values or businesses worth up to $1 billion or north. Once we've put our capital in, if we can bring a co-investment partner, if we can put gearing in there.
So I guess Shell was the first example of this type of investment?
Shell is an example of, I suppose, the scale and breadth of type of investment that we could get access to. The areas that we're looking for now, I mean, we've kind of coined it the 3 Cs for the sake of anything: collective assets, cooperatively owned assets, and even should we be able to get access to Crown-owned assets. And we're looking in those areas because, as well as the private market, a la the Shell, we're looking in those areas because we think we'd be the perfect investment partner for a lot of those areas. We're in New Zealand, we're very long-term horizon, we're here to stay, and we can bring our capital and expertise to the table.
So you mentioned Crown assets. Obviously that's quite a hot topic at the moment with Bill English's comments last week about KiwiBank. Is KiwiBank the sort of investment opportunity that would interest you?
I won't comment about particular assets. I mean, it's the types of assets that interest us are ones where we believe we can get the commercial rate of return that we're after on those assets. So we would approach each investment on a case-by-case basis. We bring a commercial ruler, and so that will always be a challenge for us. And for people who invite us in the door, I mean, we might say yes, we're very excited about getting access, or we might say no, it doesn't suit our portfolio. So, that'll be part of the maturing process, I think, for a lot of New Zealanders who engage with us. If it doesn't add to the efficiency of our portfolio, we'll say thanks, no thanks.
But you're definitely interested in Crown assets should the government decide to go down the path of partial sales?
Yes, and yes, we are, and we're interested in those types of assets because they suit our competitive advantage potentially. And by that I mean, we should be an obvious investor into those areas, and we're here on the ground, so we might be able to have a competitive edge, get into the empty room first, get access to those assets and get the returns that we need for our portfolio. And those returns are very long term, to meet the costs of future retirement income. There are other aspects to the investment strategy that on the New Zealand side we talk about. We've got a strategy around small to mid-sized infrastructure. That'll be is being managed outside of the fund. We've allocated $100 million to to a Morrison & Co managed fund. They've managed to get a good slug of other people's capital as well. That's into that, if we can get into, say, local authorities and
this
assist.
is the social infrastructure fund.
Yes. Yeah, it's been coined as social, quite, we prefer to think of it as small to mid-size infrastructure.
You also have an option there to increase, fact, double your investment. Do you think at this point you'd be likely to take that up to 200 million?
We try and, what we do is we try and scale around how big do we think the fund's growing, what would be an optimal allocation in total, just to give us a scaler of the size of investment. Then when we go to invest, it's really case by case by case as we go through. I understand they've got a good pipeline of opportunities available, and so really the next 6 months will be quite telling. That pipeline is not just in New Zealand, so they're also
looking at Australia.
Yeah. So they've got some. Australia's probably a little bit more advanced in that in the acceptance and contractual arrangements around PPP, public-private partnerships, etc. Here we're aggressively door knocking to say, we've got the capital, the expertise. If we're going to share the risk, we want to share the return.
So, where are you door knocking?
The Morrison & Co team, you should certainly have a chat with them, but they are up and down the country. It's from local authorities, it's through Crown agencies, schools, education systems, through all sorts of any area where there's a clear need for infrastructure and a clear capital shortage. And they're saying, can we separate the service provision, you're still the school teacher, from the building that you might be teaching in, those types of areas. Yeah.
In terms of the bigger types of investments you might look at, there's also, I guess, an array of private equity-owned businesses in the country, right, such as Yellow Pages, MediaWorks, who've run into a bit of trouble with the debts on their balance sheets and maybe looking for investors. Are these types of businesses potentially ones that could be of interest as well?
Everything's always of interest. Sorry, sounding so glib in my answer, but we have private equity firms already on our book working for us. In New Zealand, with Direct Capital Partners, for example, have been a long-time partner of ours, and we have a global private equity book as well. And when we say private equity, there's a lot of different categories within that framework. The group you're talking about may be distressed, managing distressed assets. There's also groups taking them from good companies to great companies, leveraged buyouts or IPOs. So we've got really the full range of private equity activities working for us globally. In New Zealand, we've got a couple of firms there. We have announced and are launching a new strategy which is just slightly south of that, called expansion capital. You've got venture capital, which is about new ideas. Expansion capital is about good businesses that are currently underway who want to take that next step, go from being a good company to potentially a great company, either nationally or internationally. And we hope there that we'll be able to invest at least 100 million over the next couple of years, and if that goes well, who knows. And that expansion capital strategy is trying to get into that great unwashed part of the Kiwi business, the family business.
The SMEs?
The SMEs, yeah.
So are you door knocking them, or?
What we've done there, that's an external mandate where we have spent a lot of time assessing good investment managers for us. They're pretty thin on the ground in New Zealand. We have people who are good at identifying investments, people who are good at transacting them, no shortage of them, they're called bankers, and we have plenty, but very few people who want to actually manage the assets on an ongoing basis.